LEAX has closed their books on the fourth quarter of 2022 and therefore their full fiscal year. And standing beside me is none other than Tony Nicol, CEO. Welcome back.
Thanks, great to be back.
For starters, Tony, this is the final report of your 2022 fiscal year. How would you summarize the year?
In reflection, we think that 2022 might be the most challenging year that we faced. And a couple things. I think coming off of a COVID 2020, massive supply chain disruptions in 2021, and ongoing in 2022. It just seems like one crisis after another, and on top of the prior 2 years, it just didn't seem to get better from a macro perspective. So I think that, super challenging year.
A challenging year. This is how you also write most of the reports for the year. Challenges are mentioned most of the time, and we'll dig a little bit deeper into that. But first, let's dig into the numbers. You reported sales for the quarter of 501 million SEK, an increase from Q3's 446 million, and this also means a 10% increase from the 2021 figures. But continuing to measure from the previous year, your EBIT turned negative 10.9 million. Was this in line with expectations?
Yeah, I think generally so. Obviously, we're a little disappointed to have a negative in the column, but I think it's very much in line with expectations. I think the thing that really prevented us from going positive in the quarter was more of a timing effect. We're out there trying to recover costs that are rising just on every level in the business, and these things do take time. Obviously, where we have contracts in place with fixed timing, those tend to flow through. But in the case of Q4 specifically, where some of the elements of our costs are not covered contractually, those recoveries take time, and we're seeing some of that recovery even in Q1 of this year.
Indeed, and I read about this in your CEO letter, but it caused a little bit of confusion. The time dilation effect that you're mentioning, could you elaborate a little bit on that?
Yeah, and sorry for causing confusion in the report, but we tend to not disclose contractual agreements, but in certain cases, we have recovery mechanisms that allow us to recover 6 months later. So if steel, for example, is going up in Q4, we will see the effect in Q2 of 2023. So it varies across our customer base. It also varies across our supply base as well. So we have similar mechanisms on the supply side. But that really would explain the timing aspect of the recovery mechanisms that we have.
Negotiations were mentioned in this part of the report. I'm curious, what sort of negotiations are these, and how has they gone as expected?
For the most part, okay. And when we talk about negotiation, it's for those elements that are really not covered contractually. The major cost elements in our business are steel and energy, and then then you have the tail of things like people costs, things for cutting fluids, and the consumables that you use in the business. And those elements tend to be the ones that we have to negotiate. Steel and energy are quite contractual in our business. So again, you have maybe timing for those, but you're going to recover those costs. It's these other costs that, in a pre-2022 world, we're not so high on our radar screen. Typically not covered contractually. That you're ending up having to sit down and negotiate. But I think it's clear for most people in the world that inflation is a part of today's world, something we haven't been used to in the, really in the past decade, right? So it is taking us time to get out and visit customers and sit down face to face and make these things happen.
The time dilating effect, you mentioned that we'll see effects of this in Q2 2023, but these negotiations, when do they expect to be finished?
I think that's a great question because, it's almost perpetual. You're always negotiating, one way or another. So, our primary lead on these negotiations is our sales team. They're out every day. I think, and we use kind of an 80-20 type of approach. Our biggest customers are representing 80% of our business. That's where our focus is, and we're out there. This is a KPI that we're tracking kind of on a weekly basis. How many negotiations have been closed. So I think 2023 is going to be less of a negotiation year, let's put it that way.
I see. But continuing to look then at your income statement, there was a rather big post here, and it was taxes. 67.2 million SEK, the final result became, and this was due to taxes of 49.3 million that came up. Could you explain what was taxed and why?
Well, that's tax on our income. And the reason why it came up now is we've been in the process of looking at the legal structure of the company, taking a look at the balance sheets of the various businesses within the group. And in this case here, we had a tax asset that seemed in the restructuring that we would not be able to utilize. So this was deferred tax payments that we made the decision to pay in Q4. So this is a prior period tax adjustment that we took in Q4.
Tell us more about the changes you're doing. How does LEAX leave the quarter differently than it entered?
From an operating perspective, no changes whatsoever. So as I mentioned in the Q4 report, we've done what I'll call a restructuring. It's not a restructuring. It's just the way that the company is operating from a legal perspective. So it really is that process was designed to make the company reflect how we operate today. If you recall, LEAX has been growing for the past 20 years at a CAGR of like greater than 20%, which included mergers, acquisitions, greenfields. And the legal structure was kind of a little bit living in the past, and we wanted to make it reflect the present and the future.
But at the start of the interview, you called 2022 a rather challenging year. And as I recall in our previous interviews, you've mentioned these. And it is component shortages, delayed orders, COVID restrictions, inflation. But I'm curious now that we move into a new year, 2023, what sort of challenges have been dealt with, and what sort of challenges are moving in with you and continuing to affect LEAX?
Great question, as always. So, from our perspective, I think each of those, challenges that you've mentioned is being dealt with in one way or another. I think the biggest challenge as it represented for LEAX was the supply chain challenge or component shortages, not in our own business, but at our customer level. We're seeing signs of stabilization even in 2022. Some of our customers manage their supply chains better than others, which just is an indication that it is recovering. I think in 2023, globally, the supply chain is in a healthier position, and that should obviously have a direct impact on our business. I think inflation is cooling as well. I don't believe prices will come down, but certainly not rise as fast. So just in general, we have a better feeling about the year. But I caveat all that with kind of two things, which is the macroeconomic situation that we're dealing with, and then the geopolitical, the global politics that certainly can one news story can have a negative impact really on the global economy. And these are impossible impossible for me to gauge whether 2023 will be better than 2022 from that perspective. And I would just say that if you've been watching any of the G20, which is being held in India the last couple of weeks, this is the first time kind of in modern history that they've left the G20 without any agreements. And for me, that just kind of encapsulates the environment that we're in, where this body hasn't been able to agree on anything. So kind of sign of the times.
But all of this then, what does that mean for your future listing on the Stockholm stock market?
Well, I think that one thing we haven't talked about today, which is still very much on our minds at LEAX, is the Ukraine crisis, the war there. If you recall, that was kind of I'll use the word trigger, unfortunately. That was what caused us to delay the IPO. I think that, and then everything that came after that, the volatility in the markets, there's a lot of money that, parked itself on the sidelines. And I think that, our ownership is saying, you go public when you think it's the right time. And that's the feedback we get from our major shareholders is, we're not in a rush to go public. It needs to be the right time. Despite a 2022 that was challenging, we remain extremely bullish on the company. We're executing on a lot of fronts, and I think that it's kind of stay tuned here on when we will go public. But it's something that we discuss every quarter, every board meeting. But right now, there's not an imminent need for us to go public, and there still is a lot of uncertainty in the market.
Thank you very much, Tony Nicol, CEO of LEAX Group.
Thank you, Michael.